Welcome back. Well, let's focus on the hotel space. It's been buzzing all week, and Chalet Hotels, that's the next stock on our radar. They've done a new acquisition where they have bought Mahananda Spa and Resorts for an enterprise value of 530 crores. Mr. Sanjay Sethi, the managing director and CEO of the company, joins us on the show. Hi, Mr. Sethi. Good morning and congratulations on this win. You've paid around, I think, the total enterprise value is 530 crores. Break it up for us. How much of cash are you paying? How much of debt are you taking on board? Basically, break up this 530 crores for us.
Good morning and a pleasure being back. This is an all-cash deal. There's no debt on the books of that company, so we've actually paid out 530 crores to acquire this lovely asset, which is the Westin Spa and Resort Himalayas, which is roughly around 45 minutes from the Dehradun airport at a wonderful height of 2,500 feet above the Rishikesh base. So therefore, the temperatures and the weather conditions are stunning, the resort's stunning, and we are really happy to add that into our portfolio.
All right, difficult to sit in studio when you describe a resort like that, Mr. Sethi, but good on you. Give us a couple of more details. This 530 crores, as you mentioned, it's all cash.
This is
how is your balance sheet looking right now? If you could tell us how much of cash you had and how much goes out post this. So the balance sheet pre and post this particular deal. And also, if you could help us out with scaling up of the revenues of this, what kind of profitability does this particular resort enjoy?
Sure. So this is a 141-room resort. Firstly, the price positioning for it is around the 25 to 30,000 rupees a night. That's the average room rate that we expect out of this hotel. It is in early stage growth, so it is ramping up. We expect the occupancies to stabilize sometime in the future, in about a year or so from now, at 60%, currently operating at roughly around 45%. So we see a strong upside on the opportunity. We expect this hotel to sort of be within the parameters that we've done previous acquisitions at, which is basically by the stable year to hit it, and the first stable year to hit at least 10% ROCE, and then move upwards from there onwards. On the balance sheet side, we were roughly around a little under 1,600 crores prior to this acquisition. We'll hit roughly around 2,100 crores as net debt post-acquisition.
Okay, all right, got it. So, and you briefly mentioned that you're looking at increasing the occupancy. As of now, is it profitable? It's at around 45% occupancy with the ARR, I think, of around 25,000 that you mentioned. So, what are the rough margins you enjoy on this?
So at the EBITDA level, operating level, it is certainly profitable. We need to make sure that we hit the ramp up takes us to the 60% occupancy, in which case it'll start throwing up north of 10% return on capital employed. And that's what our target is.
Okay, all right. And do you need to invest more in this property? The 530 crores suffices, or do you have to incur some more capex out here?
So this is a brand new hotel. It's only just completed 2 years last month. We don't need to put in any material capex on this.
Okay, all right. So we got most of the details with regard to this asset. For the company on the whole, what's the average ARR and occupancy you're looking at for FY25, FY26? So,
consistent with what we'd sort of said earlier on, I think the industry will grow at 10% and northwards on a RevPAR basis. We've seen that panning out over the last few quarters. In fact, last quarter was significantly higher than that. We expect this quarter to perform very strongly, being the strongest quarter in the year. And then there onwards, I'm pretty sure that we'll be comfortably over the 10% RevPAR growth for the next few years.
Okay, and number of keys, I think you were gunning for around 30,080 approximately by the end of this fiscal. What's the new targets now? If I look at the number of keys, new hotel launches as well, and the rough capex you've outlaid, how do you see this number ramp up in the next few years?
So, our number of keys prior to this acquisition was 3,052. With this addition of 141 rooms, we've hit about close to 3,200. And we've got another 1,100 rooms under development. A few of them will hit us in the next couple of quarters. In fact, as we speak, we're adding 130 rooms to our Bangalore asset, and they'll get operationalized in the next couple of weeks or so. Look, most of our growth is actually going to come in the year FY27 when we open the Delhi hotel with 390 rooms and a couple of other assets that are under development. We also have a strong pipeline of office assets in our portfolio. We currently have 2.4 million square foot, which is ready and very quickly getting leased out. We've got another little short of 1 million square foot, which is in the making right now. And we expect that to hit the leasing stage in FY27 again.
Just very quickly, what is your borrowing cost, current cost of debt, and this additional 500 crores that you're taking, what is it at?
So the blended cost of debt for us is around 8.5%. And this is pre the recent cuts that the government has, the RBI has announced.
Okay, all right. Thanks a lot, Mr. Sethi, for joining in. Congratulations. Looks like an enticing one. Wishing you all the best, and we'll hold you to some of these numbers.
He's left us with an enticing image in our heads, right? I mean,
but
difficult to get that out on a Friday.
Need to pull through the day, Prashant. Sanjay is lucky he's heading one of these hotels, but we need to keep it as cozy as possible in the studio. Pleasure talking to you as always.
Thank you very much for joining us. A good conversation.